I'm Nancy Register, the National Director of America Saves. With me are two economists who often have differing views of the economy and the impact of these issues that affect the national economy, as well as the financial well-being of individual households. On my right is Aaron Klein. He is a fellow in economic studies at the Brookings Institute. Mark Calabria is on my left, and he is the Director of Financial Regulation Studies at the Cato Institute. America Saves is an initiative of the Consumer Federation of America and is a research-based campaign that uses the principles of social marketing and behavioral economics to encourage and support low to moderate income households to save money, reduce debt, and build wealth. Today we are launching America Saves Dialogue with the Economists, the first of 4 conversations with Mark and Aaron about savings issues that impact the national economy and have a direct, important impact on you and your families. These issues will include persistent economic conditions that seem to defy solutions, events that occur that have a significant impact on the nation's economy and on yours, and or issues related to the calendar like the one we're going to start with today. And that is, what is the role of holiday spending in the nation's economy? Let's start with Aaron.
Great. Well, thank you very much, Nancy. It's a pleasure to be here. As most Americans know, we're entering that season where people spend a lot of money, and that is December, particularly the Christmas holiday. Look, people's earnings and their spendings are mismatched over time. We get paid every 2 weeks or twice a month. Sometimes people get 26 paychecks if it's every other week, so you get that magical third Friday month. But our expenses are often fixed monthly. You pay the same in rent or childcare. You eat every week. And the biggest temporal mismatch between savings, earnings, and spending occur at the end of the year. The tradition of gift giving and holidays can add a lot of expense. Thanksgiving is the most traveled holiday in America. People don't think of that as an expense, but for many Americans that will be a significant expense of a plane, a train, a long car ride, which can involve eating out in hotels and different expenses, even despite the one meal with a family. It can be a lot. And so I think it's important. We used to have traditions in this country that aligned more closely. Annual year-end bonuses. Now a lot of that has been moved to corporate structures or in the beginning of the year. Our tax refund system, which for many Americans is the largest check they get in any one given year, that doesn't come till April. And so a lot of people can find themselves taking very expensive short-term loans to be able to afford spending in December when income isn't going to come back into the following year.
Yeah, well, we'll come back to some of those points, but let's ask Mark the same question. What role does this year-end spending have on the nation's economy?
It's a really big impact, and I think one way to think about it, put it in perspective, the average annual change in economic activity from the end of the year, the holiday season, to January is on average bigger than the typical post-war recession. So we have a boom and bust every year, and of course we economists, we smooth out the data so you don't see that. But it's really impressive, the amount of spending, the amount of hiring. And so to put it in perspective, we're on path for all of 2016 to bring on about 2 million jobs, approximately, new jobs. During the holiday season, as many as 900,000 temporary jobs will be created. And of course, big difference between permanent and temporary jobs, but huge increase in terms of hiring, a huge increase in terms of spending. We're likely to see holiday sales be as much as $600 billion.
Yes.
So significant time of the economy. Of course, that's on one hand, great opportunity if you'd like to try to find some side work. And granted, a lot of it doesn't pay a lot, but some work sometimes is better than none. On the other hand, a lot of pressures to spend, and as Aaron talked about, you really see this big boom in spending later in the year. It really even starts at the end of the summer when you're back to school spending, and then the Thanksgiving and Halloween, Thanksgiving, yes. Christmas, but really fourth quarter, big boom in spending, really drives a lot. For a number of smaller retailers, especially specialty retailers who really focus on the Christmas season, they're not actually even breaking a profit until the holiday season for a number of them. Right. We don't really have good numbers how much of a phenomenon that is, but certainly very important for a lot of them. good or bad holiday season will really make or break a lot of small business people.
Yeah, so let's take this down a little notch, because I saw some of the same figures, and it said that holiday spending can account for up to 30% of the revenue for
Yep.
retailers anyway. Other enterprises that are connected to retailers probably have a similar bump. But what happens if that stays flat year over year? And so the spending isn't as much, the hiring could be, less. And what impact is that on the household economy, this year in spending? What is that impact?
So,
yeah.
when you get to macroeconomics, both sides of the equation on the equal side have to balance.
Yeah,
So all this spending that businesses are seeing as revenue that are supporting the jobs that Mark are describing are coming out of households. And holiday spending as a proportion of annual income is usually higher lower down the income spectrum. And so in this way it can have a huge impact on households, particularly those that are budget constrained, those that have to kind of think further out, and their revenue, their earnings aren't aligned. As you point out, a good holiday season means people are spending more and businesses are making more. Sometimes that spending more is reflective of a strong economy. We've seen wage growth last year at 5%, one of the largest annual years of wage growth. And we would expect that with strong wages will come stronger giving. People tend to give presents, take nicer trips, do more, put more stuff under the tree at the end of the year if they've had a good financial year. On the other hand, if you see it flattening and there isn't growth, that could be indicative that either the economy's slowing or people are using that extra income for different areas. Maybe it's for saving. There's a great paradox that if everybody saved more, everybody would spend less. And so that can go kind of both ways.
right. What do you think, Mark?
So as I talked earlier about the job impact, and
Right.
so of course the
Right.
target of America Saves is let's get people to save more and
Save.
help them
That's
save
right,
more.
right.
And of course we economists think of savings as the residual of your income that you don't spend. And so the primary input to that is your income. And so all these extra jobs do create a tremendous amount of income. There are also pretty big differences. For a lot of college students and teenagers, the holiday season is actually an opportunity where they can get some side work, and the reality is they'll probably get more gifts than they'll give, at least at that point in their lives. When you get a little bit older, you find out that it flips a little bit. But again, for some households and some individuals, this is really a big opportunity to increase their income and hopefully save some of that. Particularly, there's parallels here with when those of us, I know Aaron and I generation used to have college summer jobs and would work and save, and
right.
you see a lot of that in the holiday season too, where there's that working and saving. And of course, we'll get to this a little bit more later. But a lot of gift giving now is in the form of gift cards and even some degree of cash. And so you are faced, particularly as a young individual, with this windfall of assets. And what you do with it is important, not only for the economy, but also for your actual own financial health.
That's true. So does it matter? I mean, when we look at the interconnectedness of spending and job creation or household health, does it matter where people spend their money? Because I think all the statistics that we've all seen have showed that cyber spending, online spending, is way more than the in-store spending.
The
So
growth.
the growth, right.
So
It's not more, it's true, it's the growth in spending. So does it matter where people spend their money?
So it does in a couple different ways. Number one, there's a difference between purchasing a good and purchasing a service. A service is going out at night. As Mark points out, a lot of people pick up temporary work in the malls, in kind of shopping retail, as well as in food. People eat out a lot. I believe the largest bar night of the year is the night before Thanksgiving.
You need that to be praised for your family.
And so, people are working extra shifts when they're not at school or when, in addition to their side work, in part to gain that extra income to then spend it on family gifts. Mm-hmm. When you're spending money, particularly as Mark says, in smaller businesses, within the community, or in services, that's kind of keeping it within it. If you're buying something online that's made abroad, that's money that's going to go out of the community. So there's a certain amount of recycling that occurs depending on what type of purchases you're made, and then there's a certain amount that doesn't. Now, people do need to consider more holistically. You know, you say, well, you know, if I bought something on Amazon, well, somebody made that somewhere.
Right.
And
Right.
so that community is seeing an inflow.
Right.
But there is a distinction in that between goods and services.
And the
Yeah,
type
yeah.
of jobs. So
Right.
the estimates are for this holiday season that between the two of them, UPS and FedEx will hire as many as 150,000 temporary workers.
Wow.
And that's because you and I aren't ourselves going to the, again, I certainly would emphasize, physical shopping is still greater in total amount, even though the growth of online shopping, but the growth of online shopping has really driven this delivery system. And on average, even though they're temporary jobs, the delivery jobs tend to pay more than the retail jobs. So it's not necessarily that we're offsetting lower paying jobs, offsetting higher paying jobs, but there is a redistribution. Obviously, sometimes the last several holiday seasons have been tougher on smaller retailers. You're
Yeah,
often
right.
more likely to go to bigger retailers. But I really want to emphasize a point we don't think about, even though it should be obvious to all of us, that the largest amount of redistribution that goes on within society is within family and friends. And often in a very big way during the holiday season, like I mentioned
So
earlier.
what do you mean, in gift giving you mean?
The gift giving,
Ah.
and so if you think about it, as I mentioned earlier, if you're in your teens and 20s, you're often you're going to get more than you give on average. Of course, averages, big distributions around those, and so it's also a time of the year where people who tend to be older and save more redistribute income voluntarily to people who are younger and spend more, which is also an important contributor to the economy.
This is a big thing that Mark is exactly right to highlight, which is that when your grandparents give the younger folks a check at the end of the year, maybe they've squirreled that away from savings off Social Security, their own personal savings, an asset that they sold
their house, and
a yard sale they cleaned out their attic, something, right? The older person just fundamentally spends less than the teenager or 20-something. And this intra-family redistribution of wealth, in an economist household would transact very differently than in a real household, where it's done through gifts and through exchanges that are more, have deeper cultural meanings than simple cash transfers that might be settled up at a quarterly basis in a pure economic household.
You have anything to say about that?
Well, Aaron is touching on, economists have this, probably unsentimental sometimes view that the best thing to kind of do is to give cash or gift cards. And I don't want to push that too much. On one hand, it's certainly been a tremendous amount of growth, and I will certainly admit to my friends and relatives watching, some of them are going to get some gift cards this holiday
Right,
season.
right.
But it also
all
lets
relate.
you kind of pick the gift that's best for you, and it also gives you the flexibility as the receiver to maybe offset expenses you'd have otherwise. So you may save this into January and February. You're buying things you might need, or you might, you can get the gift you want. Of course, I mean, there are downsides. It is less sentimental, and there's a value to that sentiment that sometimes economists do miss.
And the timing aspect of it.
Right.
Economists would think more about when do you need that income, or they try to smooth it out.
Right.
Whereas in society, we have kind of annual moments and exchanges. And that's true, really, kind of across cultures.
It's probably the biggest thing that economists worry about in this element is we can all think about the gifts we've gotten. We don't have to think about individuals specifically, but we can think about certain gifts we've gotten over our life that, they're sitting in the closet somewhere still in the box.
The ugly sweater day, you mean? Right.
And
Right.
so, again, I don't want to be too much of a proponent of gift cards because I think they have their role, but I also think, picking an individual specialized gift. Gift cards are perfect when you are just clueless about what to get the person. So, if it's, again, if my relatives are listening for your nieces and nephews,
It's important when you look at that to read the fine print to understand whether or not they're recurring charges,
Absolutely.
whether they're kind of like anything in there that's going to be a hidden fee. When people, there's a paradox that the more people spend, the less careful they are about the dollar amounts. When you buy, the bigger the purchase, a house or a car, the more you kind of throw things in, even though, what's $1,000 here or there in buying a house.
Right.
You'd never say that way when you were, thinking about buying clothes.
Yeah.
And so it's very important in this season, particularly, there are products that are often sold at the register, like additional product insurance or other aspects that historically have been very bad deals for consumers.
Yeah.
And people are wise during this period of a lot of spending to continue to watch and their money carefully and stretch that as far as they can.
That's
So,
true.
so let's, I don't wanna stop this, but I'm gonna have to, because we've got a couple of
Absolutely,
other
yeah.
questions that we need to get to. And, what I wanna do is pivot, and I really shouldn't use that word, but pivot to a question that has policy implications, okay? So, income volatility has been much discussed recently. I think the old economist sort of, trajectory, the even increasing straight line revenue trajectory is acknowledged, at least for low to moderate income households, is really not the case. And so we know that there are revenue spikes and dips, right? And oftentimes, as you mentioned, as both of you have mentioned, that expenses don't necessarily coincide with the spikes, and they and expenses, less expenses don't correspond with the dips. So what I'm wondering is there anything, as we think about the products and services that we're all talking about, to help people save when they have these revenue spikes and dips? Is there anything that we can learn from a policy perspective or a product or service perspective from this year-end spending spike in both spending and revenue that would help?
You know, I think the fact that, as I mentioned earlier, the boom and bust at the end of the year, the
That's right.
holidays, is bigger than the typical recession. Unlike the typical recession, we see it coming, so we have some ability to know that the holidays are around the corner, and you think you want to spend at least so much so you can plan for it. And there are things that can be done a little differently, as Aaron touched upon earlier. It used to be more common to get a year-end bonus. I was in Brazil recently, and they have the 13th month pay thing there. I'm not necessarily saying we should adopt that
right.
here. They give you an extra month pay, but of course it comes out of your salary the whole year round.
Oh,
It's just the timing
just
of how
feels like more, right.
of how you get paid.
Right.
And certainly more businesses now are trying to go toward, particularly because of the record keeping is easier, paying you more often. So that's one of the opportunities. Of course, and this is more my parents' generation, where you think you would buy things on layaway, but there are options. So I think the message to take away is, if you really think about the planning you have to do in your life for the holiday season, when you know it's going to be a boom and a bust, you should take that to the rest of your life too. You may not know when that boom and bust is necessarily going to happen, but trying to do some of the same things that make it easier to save and plan for. And of course, when it is doing really well, work and save, and with the understanding that there will be a rainy day somewhere, just as January does come eventually, and you may lose that temporary job.
Right.
So certainly things that employers can do, and again, to try to smooth out, or even you can try to set up accounts that don't pay, and so don't pay until the end of the year. Unfortunately, in this environment, your savings don't pay much, but that's not a reason not to save.
Right.
So I'd say a couple different things.
Yeah.
Number one is, if you're cash strapped going into the holidays, or you feel that it hasn't been a great year for you, slow down now.
Absolutely.
Take a break in November. Pack an extra lunch to work, a couple days a week, or, figure out, go through the old pasta in your cupboard. Figure out ways to try to save a little bit. Take a walk instead of going out one night. Figure out ways to save now so that you can enjoy a bigger holiday season. Number one. Number two, there's some new financial technology or fintech products coming out to market. We just had an event here at Brookings where we heard CEOs of a company called Even, which works through employers to even out your salary,
Yeah.
so that when your hours go
Yeah.
up or down.
Mhm.
There's one called Employee Loan Solution, which works through a bank, which then kind of does a similar thing based on your bank account receivables, to help you try to even your money out, so that you're not stuck taking high cost short-term loans. The second thing is, work with your friends and family about when they get that gift. Everything doesn't have to be physically held right there. You want to give somebody a summer camp for the summer,
Right.
print it out and show it to them. That is a gift. Try to realign some of your expenditures for those gifts with the actual moment. So there are a lot of different things that I think folks can do now. And then finally, when the season's over, think about changing for next year. What are the 3 different tips you could do better next year? Could you save a little more of your income or your tax return? Behavioral economics has shown that when people have unforeseen windfalls of cash, they're more willing to save than if they are kind of abstractly on a steady state. So set up, sometimes you can even do this online where you set up an auto rule. If your account comes above a certain amount, just take it out and put it into a separate account that you don't touch. As Mark's right, you're not going to earn very much in interest, but you may save more than you do pay in fees. If you overdraft your checking account, that's a pretty high and hefty fee.
That's right.
Could be larger than the whole interest you make in a whole year in a savings account.
Just to follow up on something, I think the foremost, we've talked a lot about the importance of spending and driving the holiday season,
Right.
but you certainly should remember, your friends and relatives are going to understand if you're in a situation where you can't, and don't feel that you should. And I know that sort of seems obvious, but it is kind of important to remember that. I think it's also important, I'll admit I have the tendency to kind of shop for each individual kind of in isolation. It's like, oh, this would be perfect for so-and-so. And, I forget in the back of my mind that it's all kind of adding up. And really what you want to do is to start out with, what's the total budget for your holiday spending that keeps you where you need to be?
That's right.
And then think through that. Say, here's your significant other, and you want to spend that much on, here's your parents. Do that first, rather than being driven by individual gift giving, because the individual gift giving, you end up spending a whole lot more.
And that's right. And having that budget will help you from making an impulse decision at the register where you think you're making the gift even better, when in point of fact you're blowing your budget.
And Aaron touched on this too, which is there's so importance of sort of non-monetary giving. A lot of people, I can certainly say, if I asked my mother what she would want more time with me. So, and
Economists
that's a big
think of time as equal to money in a way, and if you share your time, that can be of a greater value than sharing money.
Yeah, even if you want to give a coupon for, if you, let's say you're a teenage boy, you want to get something for your mom, but you don't have any money, give her some coupons that you made yourself on, here's me giving you an hour worth of help around the house. Those things go a long way.
Those are good ideas. The one big piece to holiday spending that we haven't talked about, though, is the use of credit cards.
Yeah.
Because an awful lot of people put all of their holiday spending on their credit card. They rack up huge credit balances, and then in January they have to pay the piper. Many of them decide to use their tax refund if they're going to get it to pay for holiday expenses. So number one, what effect does this have on the macro, the national sort of economy, if any, this
So it certainly allows
And
the
then-
holiday
and
spending to
then
be
down
more than
to
it would be
the-
otherwise.
then down to the household.
So
Right.
certainly the bigger impact is
Yeah.
we all spend more than we would otherwise, and that's certainly true for me, as it is true for all of us in the economy. The flip side, of course, is that come the new year, you have to pay it back. And I do think that you can use credit cards again. I'll say I put most of my holiday spending on credit cards and pay it back at the beginning of the new year. So you can do so responsibly. The choice is not to use credit, but the choice is to use it in a way where you can pay it off. It's also thoughtful in terms of, if you're getting cash for holiday gifts and you think about that you've spent a bunch on credit cards, it's not a wrong thing to do to use that cash to pay off the credit cards from the gifts you've bought.
Yeah, so I'm going to say a couple things on that. Number one, avoid fees.
Yep.
Don't go over your limit. You're better off charging something on a credit card than overdrafting your debit
Absolutely.
bank account. So credit cards, if used responsibly, can be beneficial. People say, I have this credit card, but it's just for cases of emergency, so I'm going to overdraft my bank account. That's a horrible mistake. If you use credit responsibly, you can use that, even if it's a little bit expensive, to transact, as long as you don't use it in ways that can generate, over the limit fees. Late payment, always at least pay the minimum balance, whatever you are, and try to avoid overdrafting your checking or savings account.
Again, it should fit within the budget you've planned for yourself. And if you stick with that.
And if, by the way, you are going to use your tax refund, file early.
Yeah.
Because the quicker you get your money back, and don't wait to the end of the month because you're accruing interest on a daily basis. Pay your credit card off the minute you see that check clear into your bank account. So there are ways that you can bridge this gap between spending and revenue. But people can often end up spending hundreds of extra dollars waiting till April 15th to file, waiting to the end of a month on a credit card bill.
Right.
And I'm the last one to encourage you to do your holiday shopping in the last minute like I do. But the fact is if you know you're going to have to put it in your credit card, you're not going to be able to pay it off until you do your taxes or otherwise. Don't buy it in November.
Right.
Buy it in December. I mean, you can get those dates and save yourself a month's worth of interest.
So this is really good advice for individual households, but earlier this year we had a conversation about whether or not there were national costs to the low rate of income household savings, right?
Absolutely.
We had that conversation. I'd like to ask the same question now, except for the high debt loads that a lot of households have. Is there a national cost that all of us pay or that the economy suffers because of households carrying trillions of dollars in credit card debt?
Not so much.
No?
Not so much in the sense that if everybody spent less, the economy would be smaller.
Mm-hmm.
So if we all of a sudden next year aligned all of our spending just to our income or even less to pay off the future debt, you would see a shrink in the economy particularly quickly. To the extent that people are spending money and fees and interest income that isn't really paying off purchases, then there's a little bit, but that money then goes into the people who lent you the money and eventually kind of can recycle into a lot of the current economy. I would say that the real costs involve personal costs, stress, unhappiness. Debt has a tremendous negative impact within a household, and breaking down those bonds is actually far more detrimental than any type of macroeconomic model captures. But would the nation's GDP growth be better if we all spent less and paid off our debt more or saved more?
Save more?
Not in the short run.
No.
Maybe in the long run, but not in the short run.
So maybe here's where Darren and I might take a slightly different nuanced view. And again, maybe this is the emphasis more in the short run versus the long run. So ultimately, to grow the economy, to grow wages, to grow incomes, you need to increase what economists call labor productivity, which is essentially output divided by input, which is the labor input.
Okay.
And so the way we have historically done that in a big way is we invest in either human capital, invest in plant and equipment. All of these things certainly require investment. And so if we're the question about savings is what's being done with the savings.
Right.
And so savings is also the pool of resources that go into investment. So there is a concern ultimately that if there's not enough savings in society, that investment will itself be lower, which means income growth over the long run will be lower. And I know that there's this tension between the short run and the long run.
Right, there is.
We think about it in terms of like eating your seed corn, if you will, and then not being able to grow something next year.
Right.
So I do think that the level of savings that we see in the household sector today is a concern for me. I think we need to change that. It certainly is an important question of who is savings. The averages mask a whole lot of differences, and it may well be fine for households here to do the savings and invest, and households here to do consumption, particularly if they're at different points, in their life cycle and their time. It's not necessarily a crazy thing when you're 18 not to save a lot, but if by the time you're 25 or 30 you haven't done any savings, then that's going to be a big problem.
Right. So we have about 1 minute left for this conversation. Are there final thoughts that you both have about this topic of year-end spending and this huge amount of spending and also of job growth at the end of the year?
So the newer gig economy has allowed people the ability to create revenue from assets that previously they didn't use. Your spare bedroom is now Airbnb. Your backseat of your car is now an Uber or Lyft capability. As Mark pointed out, there's a lot of economic activity, a lot of people moving and spending money this time of year. If you had a tough year and you're short on cash, think about ways in which you can, sell, rummage around and sell those old baseball cards on eBay, or figure out, something you can move on, a decoration that you can sell an asset to try and avoid going into debt. Because the best thing you can do here is create a little more money in to balance out those expenses. And if you're in a more difficult situation, think about gifts that you can expense or pay over time when they're due. It doesn't all have to be immediately there that you can hold on that morning.
Thanks, Aaron. Mark?
Yeah, and again, emphasis, there's gonna be a big boom in hiring, even if temporary.
Yep.
Try to take advantage of that. Again, trying to make sure that within the spirit of giving, that giving cash or giving these things like gift cards are appropriate things to do. But ultimately, I think the important thing to do is not lose sense of why we have the holiday season to begin with. So I'm gonna end on the very uneconomist note, which is, it's not just about gifts and giving and cash. It's about family, it's about community. And there are lots of things you can do in that regard that don't cost you a lot of money, and time is often more valuable than money in the long run. So through all that, don't lose sight of that, but while you are focusing on the dollars, keep within your budget and set one.
Well, thanks, Mark. So thank you both for an interesting and provocative discussion. America Saves and Mark and Aaron are on Facebook, Twitter, and other social media platforms, so join us for a conversation about this. And we want to explore the household impact implications of national economic policy and trends in the coming months. So join us for the rest of the conversations that will air throughout 2017. So thanks again.
Thank you.
Yeah. Okay,
And everybody have a lovely holiday.
that's right.